Our companies raised $19 billion this year. All of it went into Bitcoin.
Trump media set to raise $2.5 billion to invest in Bitcoin.
There is not a really great business in buying Bitcoin, putting it into a treasury, and then selling stock against it at twice the price. I think it's going to end badly.
Take a look at this chart. It shows us the number of corporations around the world that are buying Bitcoin on a given day. These are known as Bitcoin treasury companies, businesses that hold Bitcoin on their balance sheet as part of their investment strategy. Since 2023, there hasn't been a single day without at least one of these Bitcoin treasury companies buying Bitcoin. And more importantly, the number of corporations buying Bitcoin has been accelerating at quite a rapid pace. In fact, in June of 2025, this number even reached 26, meaning on average, 26 different corporations were accumulating Bitcoin every single day. This wave of corporate accumulation has been one of the fundamental demand drivers for Bitcoin. And while this has likely been responsible for a lot of the upwards pressure on Bitcoin's price over the last 2 years, this could very easily turn into a downwards force and even become a threat to Bitcoin. Coinbase's global head of research has gone as far as warning that the emergence of these publicly traded Bitcoin vehicles introduce a substantial systemic risk for the broader ecosystem. Now, it's easy to see why more corporations are adopting this Bitcoin treasury strategy. In the past 5 years, Bitcoin has delivered roughly a 1,500% return. But Strategy, the largest Bitcoin treasury company led by Michael Saylor, has returned 2,200%. That is quite a strong performance. These treasury companies have figured out how to leverage both corporate debt issuance and capital markets in order to amplify their exposure to Bitcoin, a form of leveraged bet on Bitcoin. And we're now seeing these types of companies emerge all over the world. Metaplanet in Japan has gone up by 151% since April of 2025. H100 in Sweden has rallied 600%. And SmartWeb, a company in the UK, has risen 3,000% over that same time period. Back in 2020, there were only 5 companies in the world running a Bitcoin treasury strategy. By 2023, that number had risen to 40. And today, there are now over 150 companies that are actively holding Bitcoin on their balance sheet. That's a 30-fold increase in just 5 years and reflects a real adoption of Bitcoin as a financial asset. If we put Bitcoin's price on top of this chart, the relationship becomes even clearer. The moment the number of Bitcoin treasury companies began climbing rapidly in 2023 was the very moment when Bitcoin started to move higher. And the reason for this is quite straightforward. Bitcoin has a fixed supply of 21 million tokens, with nearly 95% of that supply already in circulation. And as more of that circulating supply is absorbed by these Bitcoin treasury companies, the available supply of Bitcoin in the market shrinks. And with less supply available and demand continuing to grow from institutions, retail investors, and Bitcoin treasury companies, an upwards pressure on price naturally builds. At the beginning of 2024, Bitcoin treasury companies collectively held 1.35% of the circulating supply. Today, that number has climbed to 4.7%, so going up threefold in just 2 years. Now, although this has been a powerful upwards force for Bitcoin over the last couple of years, you could imagine a world where these companies are no longer net buyers, but instead become net sellers. And with them now representing a big chunk of the total Bitcoin supply, this could indeed turn into a systemic risk. And the more this number rises, the larger the risk. These Bitcoin treasury companies have been going leveraged long on Bitcoin in the most ideal macroeconomic environment. Global liquidity has been expanding at one of the fastest rates since 2020 and is still hovering near record highs. And at the same time, the US dollar index has fallen by roughly 12% since the start of 2025, making this the steepest decline in the dollar since the 1970s. The combination of rising liquidity and a weak dollar has created an ideal backdrop for risk assets. The US stock market has surged to fresh highs this year, reflecting this strong risk-on environment that has also fueled capital flows into Bitcoin. Over the past decade, there's been a strong relationship between Bitcoin and the US stock market. When stocks are trending higher in an environment of easy liquidity, Bitcoin typically follows. And the past couple of years have been no different. Macro conditions have been favorable, providing a safe macroeconomic backdrop for Bitcoin treasuries to go all in on the trade. And by the way, this favorable macro environment is something that we think is still intact today and that we're taking advantage of with our members at Bravos Research. We recently booked a 20% profit on a trade on Google and a 19% profit on a gold mining stock, and now we're rotating those profits back into trades on cryptocurrencies like XRP and Ethereum that we think could have huge upside in the months ahead. If you want to have access to all of the trades that we're making day by day, understand our reasoning, understand how we're managing our risk, when we're booking profits and selling, make sure that you are a Bravos member by clicking on the link down below. Now, although we're very glad that we're in a favorable macroeconomic environment, it's important to acknowledge the other side of the equation. Macro conditions can change on a dime, and that's when we see sharp corrections take place on US stocks and on Bitcoin, like here in 2018, or in 2020 as a result of the pandemic, or in 2022 driven by high inflation and higher interest rates. In tougher macroeconomic conditions, these leveraged Bitcoin treasury companies could quickly become a source of stress for crypto. We saw this play out very clearly back in May of 2022 to a much smaller extent. Back then, unfavorable macro conditions led to a decline in the US stock market, which dragged down the price of Bitcoin along with it. One of the biggest players in the market at the time was Terra's Luna ecosystem. They had accumulated a massive Bitcoin reserve as part of their stablecoin strategy, but they were eventually forced to liquidate their Bitcoin holdings, making billions of dollars worth of Bitcoin hit the market in a matter of days, sending the price plunging by 40% in just a few weeks. So these large corporate players can fuel strong uptrends in Bitcoin during favorable macro conditions, but the same leverage can accelerate downside moves when conditions reverse. Now, it's important not to be too alarmed. These corporations are treating Bitcoin like any other financial asset in order to preserve their purchasing power, like buying stocks, real estate, or even gold. And on their own, they are a constructive development that reflect a real adoption of Bitcoin as a financial asset. And this adoption could very much continue to push Bitcoin higher in the coming months. In fact, we happen to think that this adoption isn't fully reflected in Bitcoin's price today. This chart right here shows us Bitcoin's price measured in terms of gold, and it gives us a very powerful message. Bitcoin's market cap has not grown relative to gold since early 2021. Now, think about all of the things that have happened since 2021. Corporations have been going on a buying spree. Governments around the world, including the United States, have begun recognizing it as a legitimate asset, and institutions on Wall Street like BlackRock have begun recommending it to their clients. So from this perspective, Bitcoin actually looks undervalued today relative to the scale of the interest that we're seeing in it. Given the still favorable macro conditions, we don't think that Bitcoin treasury companies are a major tail risk for now. But this could all quickly turn from a natural adoption into a speculative frenzy as Bitcoin's price rises. And the moment that the macroeconomic backdrop shifts, it could represent a real threat to Bitcoin's performance. This is why we want to be in crypto when the conditions are right, and we want to be out of crypto when the conditions are wrong. This is a strategy that has been extremely successful for us over the last couple of years that has allowed us to make multiple double-digit trades on cryptocurrencies, all while keeping our losing trades extremely limited. Again, you can click on the link down below to become a Bravos member today. I look forward to seeing you on our website. Thank you for watching.